Test radio, or test seminar. Hello, hello. Good afternoon, good afternoon. All right, so it's 4:19. What I wanted to do today, before we get into it, is I just wanted to do a webinar, or what I would call pretty much an extended recap, which will also be kind of like a technical analysis lesson um, of what has happened the past month and things that we've went over in the note, in the morning call, and the recap, and just kind of talk about it, and so you could hear my voice and I could explain some things that I speak about. As you can see right here is just the disclosures, which I have to put on, what you see before every morning call, before every recap. And basically just to make sure that anything I say you can't hold against me. um, uh, anyway, usually I don't think there's anything to hold against me, because I try and be as honest as possible, and I try and give you guys just what I'm thinking. So for those of you on Redler All Access, you guys know that my service is a service that's here to educate you. It's here to hopefully make you money. What I'm basically doing is showing you the work that I'm doing all morning long to prepare myself for the trading day. Basically, I'm up at 4:30. I'm looking at overseas. First thing I'm doing is I'm tweeting to you guys what's happening around the world. So this way I could kind of get the feel of what happened overnight. And then before I even get into our pre-market, I kind of think to myself, what should the S&P futures be doing? Europe is broadly higher, Asia is bouncing. We're probably up 12, 14 handles, or Europe is flattish after a very strong day. Asia's up a little bit. We're probably also up a little bit or down a little bit. Europe's down a lot. Asia's down a lot. I would think to myself, what should we be down? And then I look. So I basically get the feel from also it all depends on the complexion of the market, where we're at, whether or not it really matters that much. So after I do that, and I tweet to you guys like 4 or 5 tweets of just kind of like a little bit of the blueprint, what the futures are up, where some pivot resistances, and where bigger resistance or pivot support and bigger support, et cetera, et cetera. Then I commute to work and I go through first a few institutional reports to just see what's out there. And then I go through probably 50 to 100 charts, and I usually give you price points and actionable thoughts, if then situations. If this happens, then do that. If that happens, then do this, on the sectors, on individual names. If you've been looking at the names so far, typically, I start off with, I go through the SPYs, the Qs, the small caps, the banks. Lately, the banks have been like a brush over because they've been so weak. Then I go into the FANG type, high beta tech names that used to be FANG, which, we all know what FANG was, but then it's also a little bit bigger of a list of the names that I include in FANG. And then you have cloud and software, and then we've had the new issue section, which is getting bigger and bigger. And then, the my focus section, which shows you like what I'm, looking at. I might have 40 things on the note, but I might be looking at 6 or 7, near the open, because there's only so much that I could do. And then depending on the day, it depends on what I trade and how things unfold. So what I want to kind of do is just talk about, I guess, today, and go over the chart of the S&P and the Qs, and first give like a little bit of a technical analysis lesson on my speech and my voice, of what's been transpiring, and how you could have maneuvered, and how I tried to maneuver also. And then listen, it hasn't really been easy. Very streaky markets are tough when you go down fast and then up fast, and it's, you don't want to chase, but you don't want to, short, or you sell things early. So anyway, let's get into it. So look over here. Can you guys see the overall S&P cash right here? So right now, I just want to give a little bit of an anatomy of the trade, which goes over my different approaches that I talk about, just because this is almost like evergreen. This is how I'm feeling, and this is how I use moving averages. So if you remember, when this uptrend broke right around here, that is when the complexion changed of the market in early May. This is when, if we were in, 5 to 10 to 15 stocks during this great uptrend that was above the 8 and 21-day moving average, that held the trend line, that was above the 8 and 21 moving averages, but extended from it, that held again and then went again. This is when it kind of changed. And that's when I went to what I call tactical, meaning I'm not in that many longs. I'm not sitting in swings. I'm looking for longs, depending if we open up in the hole. I'm looking for shorts if we open up, or H sell setups. So this was a downtrend, okay, that wound up hitting a low at 27.28. So this was that doji low. A doji is a bar which usually means momentum is starting to slow down, and it really means nothing by itself. All this bar meant was that we didn't close in the lows and close in the middle of the range, that both the bulls and the bears kind of won, and the bears that were in charge below this entire 8-day finally got a little bit tired. So the question was what would be next here after this doji, after a move from 29.54 all the way down here. So with that being said, this next day was a gap up above the prior high and above this high. So right there, that was a power. That said, okay, this is a little bit power. It's not just feeble. If this was a feeble bounce, it would have been stopped right there. The 200-day would have been a brick wall. It would have went to here, or even maybe went to here, but not in one day. This one-day move is what I call an igniting bar. This is a powerful candle. It's there's lots of names of it. It's a wide range bar that was potent, that took back the 200-day, took back 4 days of trading. So this is the day the bull said, hey guys, I'm back, or I'm back, cover your shorts, let's see what we could do. And this move wound up being a fast and furious move. And if you remember, right around here, I think we made some really good money in these 3 days of longs, because my day count rule, usually I'm in the first 3 days. And then, we took out this trend line that showed power. And then finally, you had that little bit of a reprieve. And I think most of us were kind of trying to fight a little bit shorts right around here, because, from the lows, 1, 2, 3, 4, this was also the bad jobs report day, if I remember. And then finally, you had a little bit of a topping, not a topping tail, but a bearish day where it couldn't hold the prior high. I think we added to some shorts, and then this is when the market catch its breath, and this is when I got involved in probably 6 to 10 longs during this process, or less. I don't really remember exactly, and said, okay, we are now digesting above the 8-day moving average. Here is when we reclaimed all the moving averages. So this put the bulls back in charge. If you didn't cover here on this potent day, this was your time period to say, hey, you know what, let's just take a step back. Maybe, we can go back higher. It would have been easier if we held here for a few days before breaking above this, but the market didn't wait for anyone. And anytime the market has a fast and furious move, usually it's an indicator of another move coming. So you had a bull flag type move, and then we took out this prior high, and now all of a sudden here we are at the highs of the year, okay, or the all-time highs. If you take a step back and see the overall chart, you'll see that here we are, first kiss this morning. We hit it and we retraced. This is 29.40. And then it regrouped and went back up. In my note this morning I said I think the first 5, 15, 30 minutes will be a better sell than a buy. Why did I say that? Because from here to here to here to capping up into resistance, I figured, hey, probably not the best thing to do to buy the open. So now I came in with like 6, 7 longs, and I sold a lot pre-market. And just so you know, I sell, if I'm in 6 or 7 longs, or 7 or 8 longs, or 2 or 3 longs, whatever it is, if the gap is in my favor, I'm always selling a little bit. Now, if you look at the Twitter feed, or read my note in the bottom, you'll see that it said that I sold some ZS above 81.50. I sold some Roku above 108. I sold some Uber, above 45 and change. So I sold some things, and then I wanted to figure out where they would go if I would buy them back. And I didn't really buy a lot of them back, and a lot of them just didn't turn out so great. But anyway, here we are right now. I would love, to see this go sideways a little bit, let the moving averages catch up, kind of like what happened here, and then perhaps get a better move. Listen, if you didn't make money in this big, trend here, it wasn't that easy. With the stocks were, kind of difficult, and every single person that I followed, whether it was JP Morgan Institutional, they were saying fade the rally from 28.50. A lot of other institutions were saying the same thing, don't believe in the shorts. And here we are back at highs, and so the most smartest guys in the room were definitely not thinking so bullish. So that's why we had a little bit of a careful approach, which is what my approach is usually. That's why in here I was pausing, and that's why today I'm still, now I'm kind of back from 7 longs overnight to to flattish. So let's take a look at the cues. Give you a quick anatomy of that too. This is when, look at this nice trend above the 8-day moving average. That's when we're trying to be in some kind of portfolio approach. We're looking for the best stocks using a tier system. First move, by the way, just so you know, like on this move down, I probably would have gotten out of most of my portfolio approach. And then even on this day, I probably wouldn't have got back involved as much. But on this day, I would have said, oh, look, us take back the take back the moving averages. I'm sure leaders were leading, and that would be getting me back in. And then all of a sudden, you're above the 8-day, a little extended from here. Probably would have been lighter because we're trying to figure out, can we hold still? And then on this little day right here, we went above the 8-day again. Even if we caught our breath in here, that's your day to get back involved, switch gears again. And then we took out the high and went all the way up here until finally breaking below the 8 and 21 day again. And then we pretty much stayed below it this entire time here. I remember this also. We closed on our lows. We didn't get a gap down like everyone wanted. It was actually a gap up. If it was a feeble bounce, I remember saying it, won't get above 172, and it did. And then it also took back the 200-day and closed above a prior high. So that at least should have got you to cover some shorts there. And then fast and furious move that wound up catching its breath, let the 8-day catch up. And then, this was the day to turn in to get back into some longs when high beta tight got better again. And that's probably when I, got back involved in some of my stuff too. And then you had a gap up, protected it yesterday, and then another move up today. And it's not the end of the world that we're below the all-time highs, and we're not leading the S&P. But again, even today, a lot of stocks that opened on their highs, the market went back, and they did not. It's a little extended. We have a new range. At this point, I don't love the setup here either, so there's no reason to be, I don't think, in the cues long or short. If we open lower, so this is how my language would be, guys. So if you want to listen to like my language, so you kind of hear my voice when I say it, like my language tomorrow would be, okay, just say the futures are down 6 handles. Okay, so I would say futures are down 6 handles. Market kissed all-time highs yesterday. A little, it was a little back and forth. For today, see, can we hold above 187.16 and build a new high-level flag? That would be my language. And then maybe if we were down, and I would buy versus. So when I say buy versus, that means I'm buying versus the pivot, meaning if just say tomorrow the Qs were 188 or so, above 187, I would say, Qs are 188, has room down to yesterday's low. Let's see if we could make a higher low above 187.16, perhaps try and buy versus that level. And then I would say if it were to break and close below, chances are it gets choppier and we could see a move back towards, perhaps the gap. If we were to open up 7 handles tomorrow or so or more, I would say, all right, the Qs put a high in at 190.18. Let's see if we can get above and stay above that. If we do, maybe the next point of reference is the all-time high of 191.32. If you don't get above and stay above, then if you added shares for it to get above and stay above, you then take them off because that's not the play. If you're long, from here and you're just using a swing approach and saying, hey, until we break trend, I don't want to overtrade this thing because I can't get back in, that's cool too. But on an active basis, it would be like, if we're flattish tomorrow, say market's opening flattish after a bit of a back and forth day where the market's trying to prove it could hold higher. Use 181.716 as a high level stop. The longer we stay above that, the higher the probability we take out 190.18 and maybe see 191.32. Anyway, that's kind of like the language. And then you go to the IWM, which has been lagging, but this is the chart I posted this morning. It's been following this little ascending channel here. This was the 156-ish pivot I put it there, so it was definitely a better short than a long in the first 5 to 15 minutes, but it came back up a little bit. That was just your cash flow trade in the morning. So when I mean, short versus a 5-minute high or a 15-minute high or a 30-minute high, those are your points of reference, in the first 30 minutes. And then this usually is just your major pivot if I list it. So tomorrow, again, if the language is, we're up 7 handles, I would say up 7 handles, small caps haven't been a headwind like they were here when they were trending below the 8-day, but they're not leading. If they get above and stay above 156-ish, there's really now a void almost back up to the 161 area. and it might play some catch up. Okay, this is playing catch up because it's not leading. Anyway, that's that. So let's get to some of the charts that in the language that we had for some of the names. So typically, I usually start out with like the best acting high beta tech names when we get through them. So Amazon today, I didn't come in long. I said, Amazon. Some are long from this area, which was the flag. It was actually really reverse. We moved this up 1860. How would you approach Amazon, which was fast and furious? Well, here it was obviously very bearish. This is when it was below the 8-day, all the way down. So you're not sitting in it. If anything, you're shorting it or you're just avoiding it. On this day, this was probably a hard day to buy still. When it opened down, maybe I would have said, hey, buy verse 1672. Why verse that? That's your point of reference. That's the low. And then, after this day, the next day, I would say, hey, first decent day, took back half of this pone down move to negate some of that downside power. And then all of a sudden, this was the day that it kind of changed where it held the 200-day, got above a prior high. So that would have been a take-home day probably. And then the next day showed power, took back the moving averages, and then showed power again, and then took back those moving averages. And it's hard when it goes, 1, 2, 3 into 4 days. It's not the easiest of trades. Last year it was much easier. This was like a nice tight consolidation. I remember we made a lot of money here when this downtrend got taken out because you could have bought it in here with a stop and then traded it through and then maybe made money for a few days and then it recoiled again, went again, recoiled. This was just like, elevated down, elevate up even faster. And then in here, you had to really trust the rally that we were, which was hard to do. So this wasn't an easy trade. I did not participate in Amazon as well in this move as I did in this move when it was a little slower and more methodical. This was fast and furious, which sometimes is good, but sometimes is painful. And then even today, look at this candle. The SPY is closed on the highs of the day, right up here, and Amazon closed well off it. And I think my language was I wouldn't buy the open, but it's probably a tricky short. 1964 is your next resistance. And here, 1921 could have been a pivot too, where it opened up, traded below it. That might have been either your stop if you wanted to get out, or maybe even a short, because if it can't hold above a prior level, it could pull in. And it did go from up 25 to red. So yeah, that's what I said right here. Amazon moves well and has participated. Some are still in from 1860-ish, meaning, when it caught its breath. For me, for today, it's tricky. See if it stays above 1921 or so. The next resistance is not, yeah, I just said that out of my head. I wasn't reading it over there, but that just shows you have to read each morning on the chart and read the content in there, because that's really my thoughts that correlates to the chart. How could you have played it today? It was a very slow trade. Like, it wasn't an easy short. It basically went sideways for a bit, and then once it traded below the 5-minute low, that would have been a good spot to maybe short versus the high. And then once it broke below 19, where's 1921? Broke below, it came back above. Really, that's when it went red. But anyway, here's an opening gap. Pushed below, couldn't really get back above, and then trended down all day before retracing up. But look, market got all the way back to the highs. Amazon did not. So to me, that's, it's not giving me a signal to be long and overnight as an active day trade. An active day trader, I like when it closes on the highs, it has a pattern and it's looking good. This did not show relative strength. If the futures are up, it'll be up, but it's not something that's compelling. If you want to be in things, I think you need to be in them when they're special or compelling, not when it's kind of a coin flip. And right now, it's kind of a coin flip to be in this overnight. Didn't give you any reason, particularly today, to be in it. And now we'll see what happens tomorrow. Except for, it's a little extended. And tomorrow, if this were to open lower, what I would say is this. Now that this happened, it's not really that relevant. Now this is your high here. So, the way I would write this is, what is that, 1935. So depending on how we open tomorrow, if just say we were up 7 handles, and Amazon was up 6, I would say, Amazon was a little lethargic yesterday, up 6 or so, perhaps you could short verse a 5-7 minute high or verse yesterday's high of 1935 for just a cute trade for it to go red. If we're down 6-7 handles tomorrow, I would say Amazon was a little lethargic. You could try verse 1905 because now that's important. Why is that important? That's today's low. That's all you know besides the 1892. If 1905 doesn't hold, the next level below would be 1892. But again, there's no tradable pattern here. This was a tradable pattern when it broke the descending channel here, but it came all the way from down there. But anyway, so now the bears will say this is a lower high. This really is not that potent, and it is what it is. For me, I would say it's just really not that compelling right here. It's just trending. So maybe you want to trade around the range or just sit. If you're sitting it and you say, hey, this is going to get above 1964. If the S&P gets to 3,000, we're going to be above 1964, and then we're going to be at 2050. It's the best stock in the world. Okay, then sit in it. If you're day trading it though, actually, I love this trend. It was so much easier than this. But anyway, that's where that is. Facebook is, is giving, some moves here. Lots of things to do here the past 2 weeks. First, when it broke the downtrend, when to do that right there. It did that when tech was weak. That was on the what's it called, the crypto news. Then remember yesterday, 2 days ago, I talked about. I don't even, that's what I said, but it was pretty accurate. I'll show it to you anyway. Anyway, that's that. So let's get rid of this for now. So basically, Facebook now, it's got to rebuild. Okay, this is when it got tight. This is when it's exciting. Unfortunately, I remember this day. This day was a tough for me because I was long in, and that was when the email news about Zuckerberg came out. So it stopped me out, and I didn't get back in, which I should have. And then I still could have went back in because that Friday when the market was weak, it was strong, and then all of a sudden, boom. So my next real good setup here was the short. This was shorting into strength versus a 5, 15, 30-minute high or a divergence. If you remember, I tweeted to you guys when it was at 190.50 saying I think it goes red. I might press, I might not. But anyway, went below this. And then yesterday, if you were short, good spot to cover, held the gap, closed well. So you had a little bit of a take home. And then today I was like, all right, it's kind of below 194.53. I wouldn't buy it, but it has room if it wants to go. And it was kind of lethargic. So now what's this? This is 187.64. So that's your new point of reference, 187.64. And then this is today's high. What is that? That is 191.16. Let's get rid of this. We don't need that there. 191.16. So just to let you know my thinking, obviously it's in rebuild mode. It's not really a compelling pattern. But the way I would scalp it is, again, just say tomorrow, if the market's a bit lower, like just say down 6 handles, I would say Facebook is in consolidation mode, didn't really lead yesterday. If you want to try, it's down, where did this close? This closed at 189.21. If it's just say down $1, I would say, Facebook didn't really lead. It's had a really big move. It's trying to, prove it could hold above the 184 level. If you want to try it verse 187.64, maybe it goes from green to red. And if it did that, then maybe it's building a higher consolidation. And then at some point, there's another pattern here to trade. So maybe it gets tight in here and rebuilds to then make a move above this to get back to the, above that. But we'll see. If it opened up, I would say, hey, Facebook didn't really have much power. It's still trying to digest its big move. Maybe you could try and short it verse 191.16. If we're up 10 handles tomorrow and opened above 191.16, I would say Facebook didn't act special yesterday. It's opening above 191.16. See if it holds it and builds. If it doesn't, maybe it goes red, and then see how it handles 187.64. So again, I'm just trying to teach you a little bit about my language and about the pivots that you're reading every single day in the charts. I know you probably had a long day, so hopefully I'm not putting you to sleep, but I'm just, again, trying to educate you. This was a key spot here. And now, you had your little bit of a wide range candle that said, hey, it's got to consolidate for a while. Point of reference. This 180 was down here. Now obviously it's not as meaningful. Same thing that happened here. Remember, it went up and I was like, let's see if it could hold verse 172.68, and it did, and then went. So now can it hold verse this? And if it could hold in the higher end of it, then it's that much better. Since I'm talking about this, I'll talk about Twitter. Twitter, is very frustrating. We made a lot of money on the earnings and it was acting well, and then all of a sudden it's just been lethargic and weaker, and I got stopped out today. I apologize if you lost money there. This 35.75 got stopped out. Here was your topping tail, so that right away there, that should have been your clue to take some size down, and then it was red first, broke this, and I don't know what it's going to take to get back going again. All I know is that it's not acting well. It's not participating. Twitter lags, but might play some catch up. Might. I'm still long verse 35.75. Strong volume has to take it above 36.70, which is right here, which was resistance for it to get better. Didn't happen. Turned lower, and now it's a whole lot of nothing. We'll see what it does tomorrow. Maybe it does a red dog reversal where it trades below it, does a bottom tail, but it's really a pain in the arse. This right here was your bull flag that could have got you out of the way, because that's when it turned from special to wait and see, and then this topping tail or reversal led to another lower high, and it's really not acting well. So you don't sit in things that are not acting well unless you're in them for years, and I don't even say you should do that. But anyway, that's that. Google's trying to do a lower level rally or active sequence. Google has lagged but could play catch up and see 1125, whereas the 200-day sits, if it gets and stays above 111.18, that would help. So if you guys remember, and obviously this is a gap down after earnings, I put it in the penalty box, and it's been below the 8-day ever since, so it's been broken. Finally down here when the market bottomed, I was like, hey, let's buy the calls. I bought the $12 calls, sold them for like 39. That was great. Then what did it do? Went sideways again, reclaimed the 8-day, and now it's just trying to do like a broken bounce back to 1125. But it is Google. Google is still one of the best companies in the world, so people are still following it, but it's lagging. Look at the size of this move back to highs when the S&P went back there. So this isn't best in breed. This is a laggard. So you have to be very careful with laggards. Yes, sometimes they can rebuild and become better, but you have to be careful. Netflix, my language was, I think it's a better short than a long today. And that's what it did into this 370 area. So now you have a doji here. Remember what a doji means? This doji on the bottom side wound up triggering a move higher. This, I guess, let's just move this down. This is what? This is 370-ish, right one right there. So it's definitely a better short than long. And now I guess you got to see what happens here. This low from today is 361.22. So now that's your new point of reference. In order for this doji really to mean much, besides a rest, it's got to get below and stay below 361.22. What I would like to see is some inside bars, inside candles, go inside for a few sessions, and then maybe 370 will be viable. Again, this market's tricky because the moves are fast and furious. Outside day led to a 5-day down move, and then this bar right here took back the prior high and said, hey, bears aren't in control, and then quick up move. And now a little sideways would be good to then give you a better pattern. But this is the way Netflix has been trading. Since I'm talking about Netflix and someone asked about Disney, I'll go over it here. Disney hasn't been easy. Disney still looks good. Disney still held the 8-day moving average right here. I bought it on this day, and then I sold some, and then this reversal day, because I wasn't sure what the market was going to do, got me out. Here was a reversal day that led to another reversal day that finally closed near the highs. And at this point, if you're a swing trader, not active trader, sometimes I'm like, if you're very active, I would get out. But if you're a swing trader, sometimes if you get out, you don't get back in. This has been a good swing trade, since clearing here. If you were active, you probably would have got out on this day or maybe on this day, but then you might never have gotten back in. But anyway, Disney's still acting well. It's above the 8-day, it's above the 21-day. It's fundamentally rock solid company. It looks like it's this little reversal. What's a red dog reversal? Well, it pushed below 138.97, came back above it. So if you got out into strength here, also let's talk about this right now because this is a good little lesson. So on this day I took home Disney. So what do? I sell a little bit into strength. If you sell a little bit into strength, it feels good. If it doesn't hold a prior high, which is right here, and just say I took home 500 shares and I sold 200 into it up $1 and change. Now I have 300 left. If and when it breaks the prior day's high, meaning it's not showing upward strength, I probably would get from the 500 down to, I was at 300 down to 100, and then if it went red, I would get out of it. So this way, sold some strength, salvaged a little bit, lost a little, and didn't lose your entire money on taking it home. So then if you got out of the way into here, all of a sudden on this day, if you're not long it anymore, you could use the red dog reversal tactic where got below this. This was 138.97, went as low as 138.50, like 40 cents, not even. Bought it, held it, and then today it probably gapped up with everything else. So you could have made money selling some. So then this way, when it came in and held here, you could have been buying some back. I tried to do that with a few of my names, but they didn't work. So let's talk about those. ZS, I came in long. Basically, I was tweeting to you guys that, yeah, look, great setup. We went over a few times in the past week or so. I did tweet that I bought yesterday as it looked poised to take out 80s, 50s, so now it's opening above it. I will trim some and hold some and maybe see if I can add if it holds above that pivot. Well, I was selling some at 81.40s and 81s, and then once it went back below 80.50, I sold some more, and then it went red, and I kind of held a little bit, but then I get out of it, and all in all, I probably should have stayed in some because it's still above the 8-day, still acting fine, but on an active basis, this is annoying. I hate to say it. This should have been a nice, powerful day closing on the highs after going sideways for so long. But anyway, I made money in this because I sold a portion. So just say you took home 1,000 shares, you get down to 500, booking a buck and change, and then it gets back below here. Maybe you get down to 300, and then, if you're not committed to it, you get out of the rest, and now you have to wait again. Roku, the same thing. Roku, I took home, a decent amount. It was trading 108 pre-market, so I'm like, I got to sell some, and I'm up $1.50 in the trade. Took home some, and then when it couldn't hold whatever this was, what was this? This was 106.55. You sell a little bit more, and then all in all, if you were in a real swing, you probably bought some back here as it's still trending above the 8-day, and this is what Roku does. It gaps up and then goes red, and then you have to just trust the fact that it's going to hold it. But I'm not that committed to Roku because to me it was just a trade. I thought maybe if we open up, why wouldn't Roku be at highs, and if it opened down, maybe we could buy it to go green and then trade it through this. But I'm not in Roku overnight either. Same thing. Look, I did tweet you guys. I bought it back. I trimmed some 108-ish this morning. This chart was posted at like 8:45. So if you were in it with me, you'd say, hey, Red Dog sold some 108-ish. Let me take some off. If I would have sold it at 108-ish and didn't go down, maybe I would have bought it back for a move to 112. That didn't happen. Again, I'm trying to teach you guys my language a little bit. And what else did I have? I had Uber. What a pain in the butt. So Uber, big consolidation pattern, as it seems that all the money behind it has absorbed the loose stock from the IPO day. If I were them, which I guess I'm not them, I would gun this on volume above 145.50 or 45.50 to 45.75. You know what? It did not get above it, so there was no reason to add today. I never got above what I had overnight because it never got above this and never had big volume. If you were anticipating it, it hurt. I was anticipating a little bit. So anyway, that would get them all profitable in a nice pattern, blah, blah, blah. We shall see. I'm not them, just a trader that owns it and might see if I could add if volume comes in. Volume didn't come in. So what did I do? I trimmed a little bit above 45.20, and then, around 45 a little bit more. And then as it went ran a little bit more, and then I got stopped out as it went below the level that I said I wanted to get stopped out, which was 43.80. At this point, what does this mean? It means it's choppy. It means it's a pain in the butt. It's still fine. If you look at it, it's still, holding above these levels. It's still above this trend. It's just that it's showing, I don't know, it's not bleeding. It's not showing any relative strength, and it's a pain in the butt. So what did Red Dog do? I said, I still have a little FOMO, and I still think it's going to happen. I just don't know when it's going to happen. So I'm not in the stock, and I bought options. I bought the 45s for next Friday, thinking that if this pattern's any good, it's got to get above 45, 50 in the next week or so. And I'll have the options just in case it happens and I'm not on my desk. Because yesterday when I wasn't on my desk, all of a sudden I got above 45. I was buying 45, 40s, and I lost a lot of money because I had the FOMO to miss it. If I have the options, I won't have the FOMO. I'll just sit. If I'm at my desk and it happens in a way that's conducive, and there's huge volume, then I'll get back in the stock. But for now, I'm just sitting in the options. I'm sorry, this was not a good focus the last few days. It looked great, and now it looks like, if we get another inside bar tomorrow, which could happen, then maybe it gets tight, and then who knows, maybe it looks great again. But today hurt. We're up friggin' 270 points in the Dow, and this is off 90 cents. That's not fun. Lift, kind of choppy, still acts fine, held the 8-day. Well, if you're committed to this thing, there was no reason to get out of it. It just didn't show relative strength. I like this being stocks that show relative strength and trade with the market to the upside, not against it. So that's why I'm not in it. There wasn't many of those names that did that today. Even Apple, I said we'll get above and stay above 200, and it didn't. It was a better sell than a buy. It's above the 80. There's no pattern here. Didn't close on highs, didn't close strong, didn't close with volume. So for me, there's no take home here unless you're just in a swing. If anything, this was the pattern right here, this descending channel here, broke above it. That was get out of your shorts, maybe test longs, then you got paid. If you didn't do it there, you could have been a buyer reverse, 181.14, meaning if it holds this gap, it's showing power, and it didn't, and it closed above the prior high. So this was a day to take it home long. This was a good active momentum day, and then boom, that happened. And then if you were still in it because it closed well, this was your day, 3 up days, you sell some. Then it held the 8-day. I was in it on this day, bought some through here. Just took the 2-day trade, and now, I don't know, it's just kind of sloppy. You can move the line up. This high here now is 200.61, and there's no true pattern here except for if you're in it, you're in it. If you like it, it's been trending above the 8-day, so it's not really a short unless you're scalping it, and it's a better swing trade until it breaks. And every single day you're dealing with analysts coming out saying they're lowering their this is gone now because now this is your new point of reference. They're lowering their iPhone forecast, lowering, but stock doesn't go down. Anyway, so this is with the language this morning. Apple isn't leading the market, but it rides the 8-day higher, right? Not leading, otherwise it would be above the highs here, but riding the 8-day higher, which is not the most fun trade, but there's been things to do there. See if it holds a 200 area. It didn't. If it does, then the next is 205. That's that. There's been lots of spots to adjust. The last one was when it cleared the 106, which was this flag pattern that went through it. Now it's not really a pattern. It's a little extended. So there's really a whole lot of nothing. Just manage your trade if you're still committed to it. I'm not. So let's, it's 4:56. I've went over a lot of different stocks, and hopefully you learned a little bit about my language. Give me some questions so I can answer some of your questions, and also you can learn a little bit more about my language and the technicals, and learn how to use my my note, my videos, and my charts so it can make you more money. Questions. I've tried the VTF in the past, but it was difficult to watch the positions table all day. Would you consider sharing your screen while you're at your desk trading and setting up? No, I can't, because I trade full time. Okay, I don't have 2 clerks sitting next to me to all of a sudden when I'm buying something or testing something, tweeting out or pushing out, I'm buying this here, I'm selling it here, I'm doing this, I'm doing that. I have way too much going on. The VTF does track my trades live, so I know it's not the easiest thing to see. You see when I put it off, you see when I take it on. Now it tracks when I put things on and off. You shouldn't really be so worried about every little tick of what I'm doing. If you read my note and you know the pivots and you watch the VTF, you can put it all together. And unfortunately, I have like 6 or 7 screens. I've tried the screen sharing, but then most times it freezes my screen, my system goes down, and it affects my trading. So it's not a perfect science, and you shouldn't be doing exactly what I'm doing. You should know why I'm doing it and why you're doing it, and be able to execute without seeing everything. So with that being said, I feel like I connect enough dots that if I'm right, you're going to make money, and if I'm wrong, hopefully you lose less because I'll get out quick. But I can't screen save, and I'm not going over it tick by tick. I'm in the morning. You have everything you possibly need from my note with my entries and my pivots and my resistance and my support, my if-thens. You have what I'm in, you have my focus, and then when the trading starts, I'm on the radio talking about things, and you get to see it live when it happens on the VTF. And again, it's as much and as transparent as it could be. So thoughts on Yeti, YETI, not leading, playing a little catch up. I guess you could say it kind of broke this little downtrend here. It's above the moving averages, didn't show relative strength today. It's not special, but if you're in it as a swing, just make sure you're in it above, these moving averages. It definitely gave you one add, but I would have been adding here on this little break of this bear flag bull flag, I'm sorry, to the upside. Now it seems like I might need to pull back to here. Not special, but a little bit of a catch-up trade. Halliburton probably gapped up and went with the oil names today. Ooh, broken name, not leading. Can it get to the 50-day? Maybe. We'll see what the rest of these oil names want to do. This would be major resistance. Now it's starting. This is what I call a new active sequence. A new active sequence is a stock that's broken, but is trying to do some kind of reversion to the mean trade, or maybe the market's so strong it's called a catch-up trade. So here, this day kind of woke it up, and then it held by here, and now all of a sudden it was strong today. So if I was in this, I'd just be careful. Wouldn't I know my prices, but I would say, hey, maybe if the energy names want to catch up, this would be a target to fill this gap and see the 50 days now above the 8-day, took back the 21 days. So it's proving, this active sequence might be okay. But again, it's a laggard. I would look at the XLE. The XLE had a big gap up today. Like this active sequence started here when this took back the moving averages, and then it proved that this active sequence could stay by holding above them, and then all of a sudden you had this. So now, if I was looking at the XLE, I would say, hey, see if this gap holds. If it could digest above this gap, perhaps this active sequence could make it up to the 200-day. Hold on. How does quad witching tomorrow affect the action? Well, I would look for where there are major strikes, and chances are option dealers are going to have a vested interest to closing things where a lot of people have calls and puts based around. Scans, some people, I personally don't use scans during the day just because my arsenal is so big, and I kind of use the virtual trading floor chat room when people bring things to my attention. I have 6 screens, so I get to see what's happening. I have 12 level 2s. I have lots of groupings. So like I group like the software names together, the IPOs together, the high beta tech together, the banks together. So I kind of know what I'm looking for, and I see a red. If I see a group go green first, that's what I'm looking at to see if we then reverse in the market. Those are the ones that have the best power. But I'm not a news player where I'm looking for scans on things trading a high volume and just going there. If it's brought to my attention, I'll look at it. Or if it's one of my names and all of a sudden it's trading big volume and is a great chart, and there's news, I'll then get into a higher tier versus just 2 or 3. How do you keep track of 12 to 15 names when things are going fast, pivot level wise? Well, I'm up so early and I'm doing my note, my videos, I kind of mentally know where all my pivots are. And then what happens is, if all of a sudden I'm in 10 longs and the futures in the market has a move from 945 to 1010, I'm almost like trading my P&L. I'll look to see what didn't move. And if they didn't move and they didn't show relative strength or showed relative weakness, I would probably reduce them. If all of a sudden I'm in 10, 12 names, we open down and we go lower and my P&L doesn't go down, I'll see what didn't make new lows with the market, and then maybe I'll add to those. And then if we trade above a prior high, if the market reverses, I add to them. So when I'm in a lot of names, I usually am trading more my P&L versus the positions, but I have an eye where I could see what the positions are doing within the portfolio approach. Trading view, yes, that's my charting. You could see right over here, this is trading view. You could use bigger moves, if you're not trading as much, if you look here, you go to let's see, if you're looking at a bigger move, like you're like, okay, like it depends on like who you are and like what you're trading. Are you a macro trader? Are you just trading your your 401k, or like here, it's like this is now at a macro level. Hard to be a buyer here, but also if you sold it here because we paused this day, you might not get back if we go sideways, take out 29.56 and go up to 3,000. If all I would say is if you're trading actively in trades and stocks, use the 8 and 21 day to adjust. If you're trading more swing and macro, then I would use 50-day moving average or 100-day moving average or a 200-day moving average, not the 8 and 21 day. lower, the higher the moving average, the more active you are. Oh God, work was horrible today. So let's get into work, okay, Damien? I'm gonna, damn John. So you guys all know my art of the first day in trading, okay, of an IPO. Usually it's got to get above and stay above a 5-minute high or a 30-second high. If it doesn't get above its opening print in that high, then the demand doesn't outweigh the supply. So for work, okay, I actually was away from my desk, so I missed the first move. Okay, the first move was beautiful. It made a high of, I think, 39, and then within a few minutes took it out and made a new high. So I missed that part of it. So let's go to the 1 day. So right here, okay, right here. This is a good little active lesson. So this was your first print. This is 39. You write this down. You write down 39. That was your print. You know, you can't get to 40 if you don't get above and stay above 39. So this was a fast trade, and I did not trade this. That's what, unfortunately, I'm the chief strategic officer. I'm a partner. I'm on the phone with the media. I'm doing charts. I'm a little bit of everywhere. So anyway, so here, I missed it. So this was your fast active trade that some people probably bought. It hung here for what? This opening, what's this time here? This time here was, what time was this print? Does it show that, where's the timing of this print? Oh, 12:08. This was 12:09. So it took 2 minutes to take this out. So you got to be prepared to buy when this took out 39, and you probably had to have an opinion that it's going higher. So then this was your first move. You got paid for that. Then it held above 39, and then you had to move all the way to 42. So now 42 is your next potential trade. So this was your first trade that took about 10 minutes, and you made really good money if you were very fast and you trusted and you went with it, you know, but that doesn't always happen. And right here, it broke, you know, instead of making a bull flag and continuing, it broke. Came back in, made a higher low, and then, okay, it, you know, put a higher low. Right here, you know, kind of put itself back on the map, and then got tight again. So right here is when I went back to my desk and I got a little interested, saying, hey, if this is going to be crazy and go to 50 or go to 45, now is the time to start looking at it. It's been public now for almost a half an hour. This was your first initial move above 39. And then here, wasn't ready, came in a little bit, proved right there that it's still in the game. So right now, I would be just say, now you're in tier 1, okay? Tier 1's different for everyone. So for me, just say I was in 1,000 shares, saying, okay, I'm buying 1,000 versus this, which is what my thought process was. Okay, then that happened. Ooh, okay. I'm not playing for this. I'm playing for it to get above there. Then that happened. That happened. Wow. Okay. Right here. Now I'm thinking, okay, let's let it continue to maneuver. It's going backwards. It's going backwards. Now I'm thinking, hey, if it gets above here, I'm a buyer, because if it gets above there, you know, it could be back on its way to 42. So now it's been trading for 45 minutes, eating away at some supply. This was the best trade. It's the best trade of the day. You had to just be fast, okay? And then this was when it was like, okay, I'm a little bit more strategic. I want to see a half an hour of trading. So this could have been your tier 1, tier 2, you know, and then now it's going sideways. In order to get above 41, you know, 42, it's got to get above 41.40. Then all of a sudden it starts looking better. Actually, now you could like spread this along here. Okay, still this is your resistance. Ooh, now it breaks above this little consolidation. Okay, you could have added more. So just say you were just say you were 500. Now you're at 1,000. Okay, going sideways. Maybe now you're at 1,500, and then you're saying, okay, if it gets above and stays above 42, there's nothing to the left. I'm going to continue. So now, for me, okay, I actually went to the gym. So I'm like, all right, I'm going to hold what I'm comfortable with. And if it gets above 42, you know, I'll hopefully be able to sell 43, 44, whatever. And instead I said, but my stop should be here. If this is any good, it probably shouldn't get back below this spot. But again, I was away from my desk. So I'm like, okay, I know I'll be buying 42s if I'm there. So I'm in here and my stop is 40.65. So that's all we know so far. Okay, great first move, going sideways, going through lots of supply. Demand is great. 42 is your pivot. Oh no, it's not ready yet. looking really good. So I'm sitting on my desk. I'm probably looking to add a little bit more, saying, oh my God, it looks like we're going to get through this 42. Anybody short's going to cover. It's going to be fantastic. Then didn't happen. So anybody who added here said, oh my goodness, it's not happening. They probably get out or about a little bit. Then it tried again. And now it's really starting to look better to me because now it's like hovering up here saying, wow, we're digesting here. So now you can go a little bit more further. Now you could say it shouldn't really get through here if it's going to be great. And then I wasn't on my desk, but you could have also drew a little trend line here saying now my stop could be 41.40 if you're super active. If your thought is I'm long it and I want to add through 42 for a new high trade, that's your thought. If you're like in it for an investment for a year or whatever, it's different. And then anyway, now it's going, still going sideways, still looking, pretty good, still hovering higher, still in the top end of the range. And then all of a sudden, this happens. I think I was on the stair machine. I'm like, oh my God. I'm like, that's not good. I'm like, but okay, I think my stop for one lot was here. And then I was like, okay, if it's going to be any good, it shouldn't break below there. So I had two stops in, one on my kind of momentum levels because I wasn't on my desk. And then my other was lower. And then all of a sudden, it's going sideways still. It's still trying to prove that it can hang in there. Makes a lower high. Now it breaks below this. If I was sitting on my desk, I would have probably stopped myself out here. But since I wasn't sitting on my desk, I let the stop work. And then, it started to get worse and worse. So my trade was, hold in here for maybe a new high above 42 and have a little excitement, and it didn't work. And I lost money today in this name. And that's where it closed. So it's a whole lot of nothing. So anyway, could have been great. And it wasn't. This was stop one, and then this was stop two, and and that's it. So my thing is also is, okay, just another lesson here is my stop is when the trade changes. To me, if this was going to be special, if this was going to break above 42 and do what a few of the other IPOs did and make new highs and close on the highs and be up tomorrow, it shouldn't get below this spot. Okay, some people could have given it to 40, but this was like, here, here, here. And if you were faster or you were at your desk, you could have drawn a trend line here. That's, got out a little quicker if you were right there. And then it just made lower highs this entire time. So that's my little, day trading lesson on my thought process on Slack. And now we'll see what happens. It closed well off highs, kind of like a Chewy. Another question. So Cliff, Uncle Cliffy, who I love to death, who was at my Redler Ultimate Access lessons and weekends, and who always says this is good for a tuna firm, and says all-time high, but very little special charts. True. That's why it's hard, especially when my names aren't the ones leading. What's leading? Okay, some software. Let's see how software closed today. TTD, how did you close? Yeah, didn't make a new high, still trending. Very sloppy. How did now close? Yeah, today I said it was probably a better sell than a buy, which was. Now it's a doji. Now look how extended it is. So on a day trading basis, there's not much to do here, unless you're still in it and you just say, I'm going to be in it for months. Unless it breaks the 8 and 21 day, it's different. But for a day trade, this doesn't look like anything special. You always mention 5. Okay, so that's a good question, Aman. In the beginning part of the day, you never know what's going to be the high. Okay, so if you're trading versus a 5-minute high, okay, if it breaks above it, you kind of have to stop yourself out. If it trades above, then you have to wait for a 15-minute high. Then if it trades above it, then you have to wait for a 30-minute high. If you're just saying, I'm going to short the first 30 minutes, I don't care where it goes, then it can go for 60 minutes in the entire day and you can be screwed, kind of like what people did 2 weeks ago. So let me give Microsoft as an example. Microsoft obviously closed okay, but I shorted versus a 5-minute high, okay? But really, it was the 15-minute high that was a better short. So if you go to the 1 day, okay, so here, okay, so if you look at Microsoft, okay, if you're looking to short it for a potential gap fill, okay, and you wanted to do it versus a level that's calculated, here's your 5-minute high. So my 5-minute high here was 137.49, right there. So it put its high in, came back, and then right here, I'm like, I'm shorting verse a 5-minute high because that's your 5-minute high. If it takes out the 5-minute high, it can go wherever it wants. It could have went up $5 today. So I was short a little bit in here, saying I'm going to short verse because now I know that's my point of reference. This right here was 137.49. So to me, my hard stop was a 5-minute high at 137.49. Okay, but it wasn't like my A setup. So I said, okay, then what happened? It took out 137.49 and made a 15-minute high. So now this is your 15-minute high. This is 137.66, which isn't that much above it. So now you could have lost 20 cents on your shorting versus a 5-minute high because you didn't know it was the high of the day would be in the 5 minutes, 15 minutes, or 30 minutes. So now it just made a 15-minute high, or maybe even a 30-minute high, whatever that is. And now all of a sudden I'm like, okay, I lost a little bit of money here because I risked 25 cents, stopped out, came back in, and now here I could have said, hey, now I'm going to try it again versus a 15-minute high because now the 137.66 is the 15-minute high. That was your 5-minute high. Now that's your 15-minute high, but at least now it's calculated again. Now you're shorting it here and you're risking 20 cents. And then all of a sudden, this looked a little bit better now. It got hit a little bit. And then still you could have stayed in it. Never got back above this. And then it took out, the morning range right here. And you covered whenever you really wanted to. But if you said I'm going to be in it, I'm taking my hands off my keyboard because this is my stop, you wound up making some decent money short Microsoft. I kind of lost a little bit because I didn't go back to it. You could have shorted versus this and then got stopped out, and then you could try it again. You could always try it again. Okay, and then it could have made a 30-minute high, which would have been up here. So if you look at the SPYs, for instance, the SPYs, oh, look at this. The SPYs actually made a 5-minute high and never got back above it. So if you remember this morning, I tweeted, I said the reactionary high is 296.16. Okay, it never got above it. So if you shorted versus the 5-minute high because it didn't make a 15-minute high, you wind up, obviously we're a little sweating this entire time, but then it broke below the range and then continued to trend all the way down to wherever you thought you might want to cover. But this was your 5-minute high to short against, if that's what you're looking to do for a fade. It didn't make a 5-minute high. Could have stopped here, went sideways, and then made a 15-minute high, and then came in. So you never know where the high is going to be. So if you use a 5-minute high or a 15 or a 30, at least it's your point of reference. Same way in a down move, you get a big down move. Sometimes it puts a low in the first 5 minutes, and you could buy versus that 5-minute low. But then if that low doesn't hold, it could go lower the entire day. It could make a 15-minute low, a 30-minute low, or a 60-minute low, or maybe it's not ready yet and makes a 5-minute low, a 15-minute low, and then a 30-minute low, and then that's a real low, and there's more people trading, there's more data, and then you could buy versus that. So you might have some paper cuts trying versus little levels before you have a real level to trade against. So that's what I mean by 5, 15, 30. Sometimes a morning low, sometimes a 60-minute low. When you're looking to do it versus a level of price discovery, that's how you have to do it. Does that answer your question, Aman? How about RVLV? Ugh, that was gross today. This too is very unfortunate. I came in long this. It's not the end of the world. Yesterday did a red dog reversal where it went below this and came back above it. So that was entry 1. Entry 2 is right here when it got above this. Entry 3 was there, and it closed well. For me, my trade wasn't to sit in this thing. My trade was to open above 48.36 and continue. Okay, or hold this 44.57 area. So for me, I sold a little bit, near the open, and then I got out of it just because I was like, I'm not sitting in this thing. If it's a swing trade, some guys might say, hey, I'm in this. I really like it. I think it's going to trend higher, which it's starting to do. But for me, it had no follow through to yesterday, so I'll revisit it. And then if you're really trading this, you have to be careful, if it were to break this. Same thing with okay, another lesson is ZM. ZM, I was a little long. I said if you can get above and stay above 106, maybe we see 108, 109. Okay, a lot of momentum guys went after it, went above 106. It couldn't hold it. So I sold it when one broke back below 106 because it did not hold it. So you go to ZM. Now, ZM, look, ZM looks like a nice setup if it wants to try and make one more move higher. Some are long versus the 100 area, meaning you're in it, versus the level versus looking for momentum. Others are waiting for a strong volume move above 106. Okay, stock went to 106, 107.34 and wasn't strong enough to keep the momentum. So if the momentum's not there and you're playing it for momentum, you need to get out of the way. So for me, I was like, I was in it. I added to it above 106, and then I was like, all right, it's a little bit too early in the day for this to be real. Let's make sure it has commitment to it. And then all of a sudden, broke below 106. I'm like, I'm not sitting this thing. I don't have I'm not compelled to it. I was in it for maybe a trade, and then as soon as it didn't hold this, that was your next level, 104.55. So then if you look at the one day, you could see how fast you had to be with this. So here, it opened up, tried to go through, couldn't do it, and then really, if you're really active, this 106 area was your rubber match spot, and then it broke. That should have been your out right there. It was not strong enough to get above and hold above and go. So this little flag type pattern here wound up resolving to the downside. So now it needs time. Same thing happened with PD, if you remember. PD was a potential trade to the upside. Okay, actually, this is a good example also. I was like, if we can get above and stay above this and that, maybe we get some momentum. Instead, it got rejected at 58.96 and then couldn't hold this spot. So instead, I got out. Much better to get out at 57.37 than sit in it all the way down to where it went down as low as 53. I'm not in this as an investment. I was in it as a momentum trade for it to continue. And the momentum didn't happen because it got rejected. The momentum level was rejected. So a momentum trade's only good if it gets above and stays above. Some guys might have been waiting for a short here. That's why Redler reversal works, because guys looking for momentum are buying and buying. Oh, it's not there. Let me get out, and then pressure comes on, and then that's a good short entry, especially considering it came from here. So that's why this was a rubber match spot as well as that. So that's kind of the thought process on that. Get above, stay above, or get below and stay below. Only add momentum shares when momentum levels hold. If you're in a stock long overnight, it opens in your favor, you sell some strength. If it goes back below a prior high, maybe you reduce a little bit more. And then if it goes red, you reduce a little bit more. So then you could buy a dip. And if you stay with some, that means you have a longer term thesis on it. Okay, I could take one or two and then I got to jump. ADSK. Looks pretty good. It's up for 4 days, 1, 2, 3. So now I would probably be reducing today. Have a great flight, my man.
Thank you. I'll talk to you.
Yes. So now I would say let it prove it could hold above this. So nice move. This was your day to probably be long to reclaim all the moving averages, saying I'm acting much better now. And now it's got to prove it could hold above this level and digest. And if it could prove and digest, maybe there's another trade if it goes inside for a few days and then continues. But 1, 2, 3 up days, I would be reducing, and then hopefully it hangs in here, lets the moving averages catch up, and then goes again. Six Flags, I haven't heard that name in a while. Yeah, gross. Sorry. Trending lower, it's not an investment, it's below the 200-day. Today on a strong day, closed below the 8 and 21 day. This looks like more like a short overnight than a long. All right, and then I got to do it in conclusion. It's 5:22. I was supposed to go to 5:15. I definitely should be doing this at least once a month in order to answer questions and have you guys really thoroughly hear my voice a little bit more, so then you could read my note a little bit better and understand it a little bit more, so you can make more money. At this point, market's a little extended. There's been divergences this whole week. To be honest, there's been divergences between sectors, among sectors. FANG names aren't all created equal like they used to be. Some names are, a little misdirection before they go. So if you're not crushing it right now, I'll let you know I'm not crushing it right now. It's been a little choppy. It's very easy to gravitate towards a few things that just don't work. It's great when they work, but like Uber did not work. Yesterday it would have been a phenomenal 2-day stretch if it got above 45.50 and was at 47 today. It didn't happen. So I'm out of it. I lose a little bit of money and I wait. But again, I'm not going to get into my trades in the market, except for that every morning at 8:40 or 8:30, you will have my note. And my note is my best foot forward of me putting down levels and pivots and potential, if-then action type sequences for lots of different sectors and stocks. You'll see my disclosures at the bottom. When I'm very active, I'll also sometimes tweet to you guys my virtual trading floor before the close, so you can see what I'm still in or what I'm taking, or if there's any new trades there, just to give you guys a little bit of more value. Um, uh, Monday through Thursday from 8:30 till 9:15, I usually post 15 charts. Those are the same 15 charts that that you could read about in my note and see my video, but at least you could see the chart, and then you'll also read the language on there. The language will be good for you to give you my thoughts besides the charts. And the more you use the product, the more you'll learn my system. The more you learn my system, the more conviction you'll get. And as much as I love to throw a fish in your boat, which I do all the time, and I'm so happy when that happens, it's really more you learning the process, getting conviction in what you're doing, so you could hold more positions, hold more size, stay longer, and also when you're wrong, get out of the way faster so you lose less. And I've been doing this for 20 years, and I'm hoping to do this for a lot longer. And I love having I just love having a community to talk to and base trades off of. And I would be doing this anyway for myself, so I might as well, as T3 packages it and tries to get it to you guys in a way where you can understand it, digest it, make it your own, and profit from it. I thank all of you for being in the community. Some of you that have been here for years, some of you just since the Father's Day special, and hopefully you get to know it, you get to love it, and then we just keep navigating this scenario. And if you're a little depressed and you feel like you're not making what you should with the market all-time highs, I'm sure you're not alone. This is the type of day you go home and your wife and your mom and everyone, oh my goodness, the stock market's at all-time highs, you must be doing so great. And if you are, great. And if you're not, it's the way it happens. The same way sometimes market's getting crushed and everyone's like, are you okay? You're like, yeah, I had a great day today. I was out of the market, I was short, or I played a bounce and got away. So as an active trader and trading for peanut on a living, you're not always gonna perform as well as sometimes the headlines say, or as bad as the headlines are. It all depends on the setup and how things trade conducively. That's our job to figure out how that's happening. If you trade long-term or you have a long-term accounts, like I have a 529 for my son, I have a 401k for long-term, I have a 403b for my wife who works for herself, she's a psychologist, that's a whole different ball of wax. But hopefully you have all different time frames working for you, and we could navigate this together. And tomorrow's Friday, so I'm in Short Hills, there'll be an abbreviated note, and we'll see how we act and move. And then it's the weekend where you have to recharge your batteries and find your balance, because you got to keep feeding the brain. Have a great night. I'm glad we did this, and we'll do this again within the next month. And I look forward to talking to you later and tomorrow. Bye-bye.